Joining us now with more on that, China, and maybe even a little touch of Venezuela is Kyle Bass, founder and CIO at Hayman Capital Management. Kyle, I hope you're ready because we got a lot of things that we want to hit with you. Are you ready?
I'm ready.
Let's do this. All right, let's kick things off maybe with the Federal Reserve. Obviously, you're very well known for subprime years ago. Some people suggest the Federal Reserve is making a policy mistake by keeping rates too high for too long. What say you?
Well, Federal Reserve, is the both the potential arsonist and the fire brigade, and as you know, they're the one institution in the world tasked with keeping a lid on inflation. They're also the one institution in the world, the only institution in the world that can actually cause dollar-based inflation. So I think when you look at where we are today, Brian, we created 40% more money in a very short period of time over the COVID disaster between 2020 and 2023. So the price of everything went up about 40%, on average. There are a few things that are exceptions, but now when we're lapping year over year, could those numbers come down? Of course they could come down. Could we have a year over year zero once we move the price level up 40% or 50%? The answer is, of course, we can. So I do think that if you look at where inflation is today and you look at where short rates are, I think the new neutral rate's another 100 basis points below where it is today. So I think you'll see at least 4 or 5 cuts next year.
To me, the headline on Wednesday, and Kelly and I talked about it, was not just the interest rate cut. I know that gets all the headlines and kind of all the love. It was kind of this mechanics they're doing under the hood, where they were starting what I called the son of QE or QE, quantitative easing light, and they're starting to alter their mortgage portfolio. Fannie's doing some stuff, letting it roll off. I know it's a little bit wonky, but do you find it to be important, or did we make too much of it?
Look, I think, Brian, that home prices, the real issue with what happened during the last 5 years, when they were expanding their balance sheet like they did, Brian, you remember the Fed's balance sheet was below $1 trillion until 2009. So the 2008 crisis, we were sub 1. We went from 1 to 4.5 between 2009 and 2019. We were trying to take some of that off in 2019 when the disease from Wuhan propagated around the world. And we went from 4 to 9. We went from sub $1 trillion to $9 trillion on the Fed's balance sheet in a very short period of time. So now I think when you look at what we're talking about, well, we're going to alter the mortgage bond portfolio. In the end, Brian, we're going to run $1.8 trillion at least in a deficit, if not $2 trillion this year. And the Fed's balance sheet has been shrunk from $9 trillion to about 6.4. I think we're at a permanent $6 trillion balance sheet from now on, and we're going to we'll be expanding that again, Brian. So I think you're going to be right. I don't think the wonky nuances of mortgage this or that are really going to help anything in mass, but I think going forward, you're going to see the Fed's going to have to expand its balance sheet again.
Right. In other words, as this debate rages, Kyle, is it QE, is it not? You're saying it is, but also in some ways it doesn't matter. It's like the point is the liquidity, the backstop is there, and it should be supportive of the economy and I guess of the stock market. Do you have any point of view on what's going on in China? As the data wasn't great, they're still an export-led economy. They had $1 trillion in exports. Even in the face of tariffs, it's kind of the same old story. In a story that doesn't appear to have a lot of juice in it right now.
Yeah, I mean, the export picture in China is their only shining spot. The rest of their economy, their banking system is completely insolvent. Their real estate market's down 40 to 50 and has been circling the drain for 4 or 5 years. And their demographics are collapsing. And the reason all of that is inflation. China's secret weapon. The reason, the primary reason they've been able to do what they've done around the world, Kelly, is simple. They have 64% of their electricity is still dirty, rotten coal.
Yeah.
So they are the cheapest electricity producer in the world, and they also do some slave labor. So imagine if that was your actual weapon. You talk about, we're going to build solar, we're going to build wind, we're going to be amazing, we're going to build so much nuclear.
Right.
That ratio of power from dirty coal hasn't changed, and I think that's vital for the world to understand.